If you've been hearing that the housing market is slowing, you're not wrong. But if you're hearing that it's crashing, that's not what the data says. In this month's market update, we'll be breaking down the January 2026 numbers, specifically single-family resale numbers for Fort Worth, Texas, and layering in what builders, corporate relocations, and migration trends are telling us about where this market is headed. If you don't know who I am, my name is Joshua Sherman. I've been a realtor and a broker here at Trinity for almost a decade, and I help buyers and sellers all over Fort Worth and the surrounding areas achieve their real estate goals. But to do that, we have to stay informed, and that's exactly what's happening right now. We're going to go over what is happening in the market, so let's get into it. First, let's talk interest rates, because interest rates drive psychology and buyer behavior in ways that kind of ripple through the entire corners of every single market. Right now, we're sitting in what I like to call a stable environment. It's so weird to hear that, right? Stable after all of these years. We're looking at a 30-year fixed rate around 6.16%. FHA rates are somewhere around 5.76%, CA rates at around 5.78%, and 15-year fixed rates at 5.73%. as of recording this video. These rates have been hovering around the upper 5s and lower 6s since January, which is a nice departure from the volatility that we saw through most of last year, where interest rates would swing a point or two within a day. Now, they're not the 3% pandemic rates that had everyone refinancing and going off to buy second homes, and they're definitely not the 8% to 9% panic rates that we saw and that sidelined a lot of the buyers in the first half of last year. So what does this middle ground create? Cautious buyers. They're not buyers who are frozen and not looking at homes. They're not irrational buyers that are throwing everything and offering everything, including their dog, just to get into a home. They're thoughtful, strategic buyers who are doing their homework and making calculated decisions. These are buyers who can afford to look at a home and then actually go home to think about it for a few days before they pull the trigger. When buyers get thoughtful like this, you can see that show up in the data. Fewer impulse purchases, more negotiations, longer decision-making processes, but you also see more committed buyers who usually close when they find the right property. So this isn't market paralysis on the buyer's end, it is actually smart purchasing. And that distinction matters when you're trying to understand what really is happening in the Fort Worth and, to a lesser extent, a lot of DFW right now. Newsflash, in case you haven't understood my point of view from it, we are not in a market crash. I'll say it again for the people in the back, we are not in a market crash. We are not crashing. In fact, home prices are still climbing. Now, the median sales price in Fort Worth in January was $322,500. In December, it was $315,000. And in January of 2024, it was $309,900. That's a 4.1% year-over-year increase. Let that sink in for a moment. Despite the news articles and the mainstream media swearing up and down that we're going under and that home values are crashing, our home values, on average, have increased. Now, don't get me wrong, there are still pockets in Fort Worth and DFW where values have decreased, but I would bet that those pockets are close to a new build community, and probably I would win that bet. More on that later. But it's simple. If we were crashing, prices would not be rising. It is that simple. Now, prices might not be skyrocketing like they were back in 2021, where we saw 17 and 21% increases year over year, and when bidding wars were the norm and homes sold in 4 hours or less, but they are steadily and modestly climbing at a pace that is sustainable and rather healthy. This is what stabilization looks like in real life. Prices are holding because the fundamentals are solid. Now, inventory is balanced, not bloated. Demand is selective, it's not dead. And Fort Worth, specifically, remains a highly desirable market for families, professionals, and retirees alike. This level of year-over-year appreciation might not make the flashy YouTube thumbnails or the fancy headlines that everyone is looking for, but it is the kind of steady growth that builds long-term wealth and keeps markets like ours healthy. Now, here's why a lot of people are nervous when they look at the numbers coming from January, and honestly, I get it. The closed sales in January came in at 362 homes. Last January, we closed 433. That is a 16.4% decrease, and on the surface, that does look rather concerning. But context will save you from overreacting, and context is everything in a real estate analysis. And keep in mind, all of Texas shut down for an entire week because of that ice storm. So we're working at 3/4 capacity here. Besides that, January is always a slow month in real estate. And besides, this slowdown is not just Fort Worth that is experiencing. National January sales saw one of the largest slowdowns in recent years. Texas overall is softer, with major metros like Houston and Austin showing very similar patterns to ours. Now, this is a macroeconomic cooling driven by the higher rates, the inflation concerns, broader economic concerns and uncertainty, not to mention the economic recovery that we're having from the holidays. But still, this isn't a local collapse that is unique to only our market, or even a broader scale collapse that's happening. The homes that are priced right and marketed well are still selling, and they're selling for more than they did last year. It's just taking a little bit longer than it did 12 months ago. Now, pending sales in January totaled 485 homes compared to the 608 from last January. That is down roughly 20%, and I know what you're thinking, will this trend continue all the way through the spring selling season? And the short answer to that is no. Momentum is building compared to December's number, which is typically, what we see in this seasonal behavior. It's just building back a little slower than it has in the years prior. Spring might not explode out of the gate like it has in previous years when that pent-up demand from winter is finally unleashed. But remember, buyers are taking their time. They're touring multiple properties, sometimes multiple times, negotiating harder and doing their due diligence to find the right home. Spring will turn out to be our normal seasonal booming selling self, but I think it's going to be mid to late spring before we actually see that happen. Now let's talk about our inventory. Our months of inventory is sitting roughly around 3.3 months right now. Now last year, at this time, it was around 3.4 months, so not too bad. We currently have 2,127 single family homes for sale on the market compared to 2,276 last year. What does that mean? Well, I can tell you we are still not oversupplied, not even close. So in real estate economics, under 4 months of inventory typically means that it is a seller's market, and over 6 months usually indicates that we are in a buyer's market, and they have a little bit more negotiating power and prices tend to soften. We are right at 3.3 months. But with the hot sellers market that we're coming off of from the pandemic, and really since kind of 2012, this right now kind of feels like a neutral market or a balanced market instead of a true seller's market. This balanced inventory level means that neither buyers or sellers have overwhelming leverage. So sellers can't be unrealistic with pricing and expect multiple offers, even though I know that they're still trying. And buyers also can't lowball every single property and expect to not negotiate or concede to some things, which I also know that they're trying. It is a true neutral and a negotiation-based market where both sides need to be reasonable, they need to be informed, and they need to be strategic. And that's actually a good thing for a long-term market stability. Up until now, I have been talking only about the resale market, which is only kind of paints one certain picture. The new build market, however, can really color that picture and give us a good insight of what's happening on a broader stroke. For example, D.R. Horton, which is one of the largest home builders in America and a massive player here in DFW, recently reported that they expect incentives to remain elevated throughout all of 2026. So what does that mean for buyers? Rate buydowns, price adjustments, closing cost assistance, financing help, design upgrades thrown in, move-in packages, the works. All of that will continue. And this is primarily why we're seeing buyers on the resale market have a little bit more negotiating power, even with inventory as low as it is. See, for resale sellers to compete against these massive builder incentives, sellers are needing to give up a little bit more than they're used to. So why are builders doing this, and why are they projecting to continue to do this? Well, homes are sitting a little bit longer than they have been, and they want to move inventory so they can make more money. See, buyers have more options, they have more time to decide, and more negotiating leverage. So, builders are responding by making their offers a little bit more attractive with these incentives. Here's the thing though, D.R. Horton themselves still made $594 million net just last quarter. That's nearly $600 million in one quarter in profit. So builders aren't struggling at all, so they can afford to do this. They're just adjusting to a market and, kind of taking the resale market along for the ride. If you're buying new construction this year, you likely have room to negotiate some of those terms, some pricing, and really other great incentives, especially if you have a realtor like myself fighting for you in your corner. And I do have an HC, which is a new home construction certification, so I know how to get those best incentives and negotiate for you on your best behalf. Even though the market has slowed down a little bit, I will admit that, here is what hasn't slowed down, and that is people moving here to DFW. DFW ranked as the #1 moving destination in the country yet again. Texas had the largest net migration gain of any state, adding roughly 177,000 to 180,000 residents last year alone. That is not a recession or crash behavior, that is expansion behavior, and that is driven by jobs, affordability, no state income taxes, business-friendly policies, and overall our general quality of life. Now, people are still choosing Dallas-Fort Worth over major cities like, Los Angeles, San Francisco, New York, Chicago, Seattle. In fact, all of those people are coming here. And that matters enormously for housing demand and ultimately supports our housing market. Every single one of those 180,000 people needs a place to live. Now, some will rent initially, but many will end up buying. Families relocating for a corporate type jobs typically buy within 12 to 24 months. And that creates sustained and structural housing demand that supports prices continuing to raise and prevents the kind of collapse that happens in markets without such a huge migration rate. Let's take a moment and connect the dots between population growth and our corporate growth, because a good amount of people are moving here to the Fort Worth area and the surrounding areas because companies and corporations and headquarters are moving here. Companies relocating headquarters to DFW recently include major chains like KFC, Care.com, Aerolane, Fiberlight, and John Paul Mitchell Systems. Now, these are established companies bringing hundreds of high-paying jobs right here into our economy. But it gets better than that. According to the CBRE's 2026 U.S. Real Estate Outlook, DFW led the entire nation in headquarter relocation from 2018 to 2024, adding about 100 corporate headquarters to the Metroplex. That same report projects that continued office demand, vacancy rates dropping in 2026, and a 2.1% annual rent growth in the commercial sector. So DFW's job engine is still running strong, and a strong job market means population growth, making for a strong housing market. What does all of this data mean for you? Well, if you are a buyer in today's Fort Worth market, you're operating in the best environment actually that we've seen in quite some time. Builders are offering incentives that include rate buy downs and closing cost assistance, and sellers on the resale market are negotiable and willing to work with price adjustments as well, repairs, and other favorable terms. Inventory is balanced, giving you actual choices instead of settling for whatever is available and whatever you can get your hands on. And interest rates are stable, at least somewhat, and at least for now. If you're looking to sell in Fort Worth today, you have to understand this. Pricing is absolutely critical in today's market. You cannot overprice and expect the market to meet you where you're at. On top of that, a made-ready home is super important. And marketing matters now more than it ever has before. Professional photography, staging, targeted ads, and promotion makes the difference between a house sitting or a house selling. Now, buyers are slower, so it will take more time regardless of any strategy that you might have, but buyers are still active and they're still serious when they find the right property. So make sure you've done a great job in getting your home ready for market. Now, the first thing you can do to do that is give me a call. I can help you get your home market ready and sold with a tailored marketing strategy that works for your home specifically. Now, if you're thinking about selling or buying in Fort Worth in 2026, don't make decisions based on national headlines or social media panic or even this one YouTube video. Let's look at your specific situation, your timeline, your needs, your goals, and your real numbers. Text me and we can set up a quick video call and to get all of that information. Whether you're buying or selling or looking to invest in real estate or just trying to just understand where you are in this market, I am more than happy to assist you. Now, be sure to subscribe for the more monthly market updates, and I will see you in the next one. Bye, neighbors.